Welcome to the April 23rd, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offer some insight as to how we set up our charts, what time frames and indicators we use. And for those who have been with us for a while, you already know that we try to keep it simple. We use a few moving averages and price and volume. Also relative strength line. And that's pretty much consistent through all time frames on the weekly and the monthly and on all intraday charts. So first up, we're going to run through a few broad market averages. Then we'll get into open positions in the model portfolio. And finally, we'll take a look and see what's out there in terms of new setups. First up is the S&P 500, which suffered its second distribution day over the past 3 days. There was one on Tuesday, and Thursday's 0.9% drop was on a pickup in volume, as the S&P 500 got a little bit ahead of itself and rallied into this top trend line here, and it's looking like it could use possibly a week or two of chop to allow the 20-day EMA to catch up. The Nasdaq Composite suffered a distribution day as well. And for now, it looks like the Nasdaq may be range bound with support in the 13,600 to 700 area and resistance around 14,050 to 14,100. And we'd actually welcome some chop in the Nasdaq, as this would, I think, improve the quality of buy setups. There's not a ton out there right now, especially in the type of stocks we like to trade, which are high-flying growth stocks that can move 20 to 40% or more in 4 to 8 weeks. Last index is an ETF, IWP, which is the S&P 400 mid-cap growth. A lot of stocks we trade are in this ETF, which is why we track it. And interestingly enough, it was up 0.2% today, so did show some relative strength, which is a positive here, and a sign that maybe some money might be ready to flow out of the S&P 500 and into growth. That remains to be seen, just something to keep an eye on. On to open positions in the model portfolio. We have 3, 2 of which were initiated on Thursday. First one is IR, which we bought on Wednesday over the 2-day high. Sold off with the market today. And whenever the price closes well off the highs of the session, we're always looking for the price to open higher the next day, stay above the body. So if it can hold above Thursday's body on Friday, that would be a bullish sign. Or at the very least, hold above Thursday's low. SQ, which we purchased intraday via an alert, as it pushed through this 3-day high. It stalled once it filled this little gap here from the low of 416 and reversed on volume with the market. We'll have to see if this 2-day low can hold, which is where our stop is. It's about a point below that low. It was a small position, so we're not risking much. And then we also purchased CRWD around 219. Given that the S&P 500 and Nasdaq closed at the lows of the session, CRWD's close isn't that bad. As we mentioned with IR, we'd like to see the price hold above Thursday's close. Only a 3% position here in crowds, so we currently have a stop beneath the 421 reversal bar low. For those who want to be a bit more aggressive, you could stop out possibly below the 422 low. But our stop is beneath the 2-bar low, which if it failed there would break the 10, 50, and 20-day moving averages. So as you can see, we don't have a ton of exposure. Broad market conditions are not ideal for growth stock trading, which again is what we focus on in the report. Let's move on to our current watch list. Here are a few names we're keeping an eye on. We have ALGN, which cleared resistance at 610, Not much volume there. And it does have earnings coming up on 4/28. So the next buy pivot would be the base high. And at this point, with earnings around the corner, ideally we'd like to see the price action just chop around into earnings and then gap higher, maybe a gap above base highs following the report. SWAV, not buyable up here, but a pretty strong breakout. So we're looking for the price action to pull back into the rising 10-day MA within the next few days. FND broke out on volume, cleared the base high as well. And although it's stalled at 114, could be in play for us on a pullback into this 10-day MA and this 106 area, even possibly a test to the 20 and this uptrend line here. And such a pullback might present a low risk entry point, especially if there's some sort of reversal candle off support. Tesla reports earnings on 4/26. It broke the downtrend line and now it's pushed through resistance at 700. And it's held up at the 50-day MA with 2 successful tests this week on a Monday and on Wednesday. So it's formed a little bit of a handle here. And the handle is above the 50-day MA. But again, it does report earnings on 4/26. So I don't think there's much to do until we see how the price action reacts to earnings. Some IPOs of interest, Roblox stalled at the downtrend line, and it looks like it might need a few more weeks of chop in this area here. Possibly even undercut 66 or even 64 and then turn back up. And then we look for a break of this downtrend line as a possible entry point down the road. Just something to keep an eye on though, not really actionable right now. One IPO that is potentially actionable is OZON, which broke its downtrend line and now it's formed a handle. It's stalled at the highs of the handle. Have to see how the price action holds up during the next few days. Could attempt to re-break out here. And another IPO is VZIO. Nice pullback into this rising short-term uptrend line. If the price can push through 2350 and continue to set higher lows, could be in play, looking for follow through to the upside and a breakout to new highs. On to some bigger cap stocks. We have Amazon, which reports 429. And if you look to the right on this weekly chart, it's in this long-term base. So an ideal reaction to earnings on the 29th would be a gap up out of this base to new highs, or at the very least to 3450. Facebook, also on the right hand side here on the weekly chart, just a big base, and it tried to break out, but it reversed, and now it's pulling back into the base highs and just undercut the 20-day EMA. And prior to Thursday's action, I thought this was a pretty constructive pullback on a lighter than average volume to the 20-day EMA and a tight downward trending channel here. Reports earnings 428, so the same deal here. We'd look for the very least a gap above the 10-day MA and recent short-term resistance, so around 305. An ideal gap though would be above 315, and that would be about a 6 or 7% gap. And depending on how some of these stocks that we've mentioned, such as Tesla, Amazon, Facebook, how these stocks react to earnings could offer some big clues. If we see some heavy volume breakaway gap ups on 2 to 3 times average volume for these thick stocks, that would be a great sign and evidence that market conditions are improving for our type of trading. Well, that's a wrap for tonight's video. Thank you for joining me, and we'll see you again next week.